Hello guys, welcome to Millennial Money Moves. So in today's visual podcast, I'm going to be showing you guys my portfolio on Trading 212. So let's see, how should we go about it? As you can see, so far I have invested 5,660 euros and currently have a return of plus 6.54%. So I basically started investing last year for the first time. Let's see, when did I start investing? I started investing in June. And as you can see, I started really small because I didn't know what I was doing. So I was like, you know what? Let me just put a little bit of money and see how this thing works. And so over the last essentially 6 months, I have now ramped it up to almost 6K. So basically, my investments are split into three different pies, and I'll talk you through all of them shortly. So the first pie that I have is my monthly contribution, which is my biggest contribution. So this pie is basically all the companies that I believe in, and I would describe this pie and my investments here as growth as well as dividend, because they have a mixture of the two. So here I invest 500 euros on a monthly basis, and I'm currently on a return of 6%. So in terms of the holdings that I have here, so I have the Vanguard ETF here, and I invest most of my money here because I think this is a very good and stable stock to hold. Again, Apple, Tesla, also which have been serving me really well. As you can see, I've made 205 euros from my investment in Tesla, so that's going really well. SAP, another company that I believe is a staple, which is currently down, but I'm sure it will make its way up soon and we'll be back in the green there. Amazon is really in a stock that I've had, but I'm still not sure how I feel about it because it's been red pretty much for 90% of the time since I've had it, even though I've continued to average down. But I keep holding it because, well, Amazon is a good company and with a good history. So I'm very hopeful that one day this red will turn to green. Again, here I've got BP stocks that I have here, and this contributes 5% of my invest. I invest 5% into this. This is a very good dividend stock. It's currently at 12% dividends per share, I believe. So I think this is really good stock to have, despite it being in a very risky energy industry. But I believe that BP is currently working on becoming more green, and that's clearly serving them well, as I'm currently sitting at a 10%, nearly 11% return. Also here I've got my FTSE 100 investment, iShares investment, which is also doing really well, sitting at 10%. Global clean energy, this is the future, and as you can see, this is clearly reflected with my returns currently sitting at plus 53% for my initial investment. So I've basically made half of what I invested, which is crazy but awesome. Barra Development. So this again is a very good company. As you can if you can remember, the market was down in March last year, so I came in at a good time, and right now I've made 52 euros from them. So that's another great stock to have, I would say. And then Realty Income, I think most people in the investment field are familiar with this stock. They give monthly dividends, so right now it's in the red, but I still get my dividends, so it's not too bad. Clean energy fuels is a stock that I have in another pie, but I also included in this pie because it's a stock that has so much potential and it's been doing really well in my other pie, so I want to put a bit more into it. So this is my monthly contribution and my main investment. So as I said, I invest 500 euros into this every month. So my next pie, which is labeled test. So again, this comprises of all the stocks that I have that I don't strongly believe in, but I have seen some potential in them, and it's now being really reflected here. So for example, we have the Fidelity EU Values ETF, which is basically a compilation of the top companies in the EU. That's currently doing really well, sitting at 10% growth almost. Again, clean energy fuels, this is a stock that's doing really well. As I mentioned, this is the future in which I believe. So I'm heavily investing here. And as you can see, the returns are really coming in. Lloyds Banking Group, this is a very cheap stock. I think I bought it for like 26p. It's a UK banking group, and well, 43% return. I'm not going to complain about that, but I haven't put so much money there, as you can see. Again, airlines were down from March on, so I decided to invest in a couple of them, specifically Deutsche Lufthansa, because I'm a frequent flyer with them. So I was like, hey, why not support the company? So here we're sitting at 12% return in the last 6 months, which is awesome. So Vonovia, honestly, I really have no idea. So this is one of the stocks that I bought in my early days. As I mentioned, I began investing 6 months ago without having any idea about it. I just went for it. So, and this is one of the stocks that I started buying, and thankfully it's doing well. We have this Under Armour stock here, which I got as a free stock after inviting a family member to join Trading 212. So yeah, free stock, no complaints here, or which is also doing well. I'm up 54% there. Great. And then we have this other ETF here, which is the S&P 500 IT, which I'm not investing heavily enough because I don't know so much about it, but it's doing well. No complaints here. So in general, this is a pie that's doing really well, and it was essentially just a test. So in terms of how much I put on it, so I deposit 20 euros monthly on it because, like I said, this is really a risk. And the returns based on the last 5 year, on the last 5 years of these companies are sitting at 0.19, which is not great. However, I'm holding on to it. I'm not investing so much. And yeah, well, let's see how it goes. Okay, the next one is an interesting pie that I found on Trading 212 that someone else had made. And this again is a risk. So it holds a lot of these companies that have done really well in the last year because of the pandemic. And yeah, again, I'm not investing so much in this because, well, I haven't done much research in there. I'm not going to put a lot of money. 20 euros a month is really not a lot, in my opinion. This is how much I'd spend on takeout. So the reason why I decided to go for it, because based on this pie, if the companies perform as well as they have done in the last 3 years, we're looking at, in the last 5 years, we're looking at a 2.52 million return after 9 years. So basically, it's claiming that I could be a millionaire, a multi-millionaire even in the next 9 years. Not sure how true that is because this is based on a 99.78% annual return. That's ridiculous, but we'll see how it goes. This is just a test for me and for you guys. If you're interested, feel free to follow me. So press subscribe to see if you want to see more. And yeah, let's get this going. What else do we have here? Yeah, so that's basically my main pies, everyone. So over the next couple of months, I'm going to be doing updates on what I'm investing in. Yeah, so that's it from me. Hope you enjoyed my first video. And yeah, see you in my next one.